many, many years. You're definitely one of my mentors in the business. I've known of you and been dealing with your companies and companies that you're affiliated with for several years. Can you explain to everybody kind of what your experience is as far as, what kind of, I guess, deals have you done or been affiliated with, or what kind of situations have you been in that make you, I guess, one of the people that others go to seek help or guidance as far as investments?
Yeah, Carl, thank you. And first of all, I appreciate your time sitting down with me today, and thanks for the nice words. This single-family residence space, and again, our reason for this interview today was to talk about CClass Properties. And I want you guys to know the reason I understand CClass Properties more than most, or CBs, A's, D's, whatever you want to call them, is because since I was 19 years old, I've been in that business, in the single-family residence, turnkey investment, cash flow property business. I've seen 3 or 4 different trends and tides and turns and buyers, and I've seen what's hot and what's not. I've done between 7,000 to 10,000 homes. If you count the flips that we've done that we haven't actually owned, or we've just quick flipped, it's well over 10,000. 7,000 we've done on our own. We've done a lot of land development projects. I started off with my own hands. My very first project, I drove the streets of the inner city, found my own project, and with my own hands and a couple of my buddies, rehabbed the house. That was the worst rehab project we ever did. I guarantee that. But we started off rehabbing the houses. I used to drive the streets myself. I started doing the data. I started learning how to buy at the courthouse steps, the tax sales, the mortgage sales. Started learning how to do title work. I've learned every piece of this business through my own work, through my own firsthand, through my own knowledge. No one's taught me anything. And over the years, the businesses that we've been involved with, doing all of these projects in so many different markets, and being able to see so many ups and downs, I almost feel like it's part of my bones. I can almost feel it. I can get into markets, I can feel them, I can look at some data, and I know when things are coming. I can almost predict them, not because I'm super smart, just because I've done it forever. If you play with kids your whole life, you can predict what kids do. It just happens to be what I do. That kind of sets the table for why I wanted to have this interview, which is, I think a lot of misinformation's out there about a lot of products, and a lot of people that are shooting that information out are people that have never been in real estate. Okay? And so these guys that have never been in real estate are out here teaching people how to do real estate. They're out here telling them what they should buy, and they're coming to guys that I've done business with, companies that I've been involved with, and saying, this is what we want you to provide. And then we, or the provider, can only, because we want the cash flow, right, provide what we're asked to provide. But what we're seeing is that these guys are not exactly telling the truth to the end user, okay? And it's not the best investment for the client. Now, we didn't always know that because we hadn't done a lot of these C properties as rentals. We'd done C properties in the past as owner-occupants and made money that way, and it was great. But C-Class looked great on paper, but over time, in doing some more of the rental properties, we've educated ourselves and we've grown from that, okay? And so I'm trying to take my knowledge, my experience, my background, and say, okay, we're going to find a way to now go to the public, the general public ourselves. We're going to take the providers and the actual suppliers of the product and help them now go straight to the public, okay? And what that does, it takes the pressure off the supplier, because the supplier only wants to produce the best stock, because if he can't sell it, he's stuck with it, okay? Mm-hmm. And also, it allows us to have a lot more longevity in our own marketing systems and our own sales systems, because we're given the right product, the good product, the quality product to the clients, and it can go forever. We can sell to their brothers and their mothers and their fathers and their friends, and they can be happy. When the other people that I've seen out here, they're just looking for a quick buck, a membership fee, a quick sale, and then it's over, right? And so everything that I'm going to do this year, starting with this interview, is going to be to educate the public on what the C, B, and A class assets are, and to produce and provide that best asset that I can for them, not only on the production side, but on the marketing side as well. So all the businesses that I'm involved with, I'm going to make sure push this thing, because I think it's a very underserved part of the market right now. There's been a lot of guys doing a lot of other things that haven't worked. Now we're going to do some stuff that works. So I've been in CClass Properties since the early 2000s. Started in CClass Properties, selling to homeowners, owner-occupants. The C-Class asset really gained a lot of popularity and momentum starting in about 2002 or 3, when a new class of lending came available to some of these lower-end clients. Some people that weren't able to have homes before in some of these C-Class neighborhoods now could have them, because the lending requirements were greatly loosened. Some of those exact same requirements are also what caused the crash. But having all the ability for these people to buy properties that didn't have the ability to buy them before greatly increased the price, because the demand went way up. This also created a circumstance where people with low amounts of money can invest small amounts of money into C-class properties and capitalize on large appreciation. Fast forward past the financial crisis. All those property values got very deeply discounted again. The C-class asset becomes cheap again. So now you see, okay, the C-class asset was worth X at its height, and now it's down around a bottom that it was pre-GFC. So this thing looks very attractive again. But the problem with the C-class asset now is we don't have any homeowners, any owner-occupants to really get the value to move back up. There's no stability in the market. It's all a rental neighborhood. And what that has caused is, on paper, it looks like the yields are very good because the acquisition price is very low. So you can find a C-class asset for $20,000, $30,000, $40,000 with a rent of $600, $700, $800 a month. On paper, that yield looks very, very, very good. But in reality, that C-class asset has a lot of challenges that a lot of people don't tell you about. And the reason that we're doing this interview today, the reason that I took the time to get on camera and do this with you guys, is because I want the truth to be told about the C-class asset. And what has happened is a lot of the overseas buyers now, because they don't understand the American market, and some of the marketing companies that market to those people have capitalized on this low entry cost for the C-class asset. This appears very attractive to the clients from overseas, but the reality of the situation is, if you get a tenant into that C-class property, there are a lot of X factors or unknowns that could cause your paper yield to become a lot lower than expected. I like to call them either a paper yield or a false yield, okay, because it's not true. The truth of the matter is, a C-class tenant probably 50% of the time is going to pay their rent on time, right? The other 50% of the time it's going to be they're late and you have to charge them excess fees and try to help play catch up. Either they move out of the house and leave it in decent repair and you just have to do a little bit to do a tenant term. Or they completely demolish the house and you have to put a lot of money back in the property. Or when they leave the property and it's vacant for some period of time, vagrants move in or people come in and steal things from the property. So your exposure to risk is greatly increased with the C asset. And so over the years, what we've realized is, what we've done over here at Real Deal Advisors and the groups that we deal with, is we have advised everyone, we're consulting everyone to move out of that C-class asset and move into a B+ or an A- type asset. And the only reason we're doing that is because we want clients to have investments that succeed, okay? And the possibility of failure is greatly, greatly diminished when you go to the A-class asset. I wouldn't suggest anyone from afar invest in any asset that is any less than a B+ type of asset. The A-class asset, the tenants tend to stay longer, 2-3 years. When the tenants turn things over, there's not a bunch of trash because the people have real credit scores, real jobs. They're worried that the property manager may come after them for some type of damage. So generally, their deposit, their security deposit, is enough to cover any damage that may be done. So you've got a tenant that pays on time, you've got a newer asset in a hotter market. Then when the tenant moves out, that's when most of the expenses are, is your loss of rent due to vacancy or expenses due to tenant terms. Well, when the tenants move out, your chances of having any damage that's greater than the earnest deposit are very slim. And then your tenant's paying rent 97.9% of the time. And you have an asset that's increasing in value. So the whole time you're getting paid cash flow, your property's increasing. So you're making more money, okay? And at that same time, your rent increases per year. There's rent step-ups. So your yield day one actually grows year 2, 3, and 4. Whereas with the C-class asset, that paper yield day one goes down, 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 can become negative, and can become very bad very quickly. Yeah, great, appreciate your time.
For more information and education on real estate investing, please visit our website at www.areiusa.com. That's www.areiusa.com.